Imagine you wake up on a random Monday and you realize something kind of wild. The next big thing in health is not just a new pill from a giant drug company. It's a consumer platform, a platform that watches what people want, finds the trends early, makes it simple, and turns it into subscription while combining AI with all of this. And then it ships it to millions of people like it's normal. That mass distribution could sound a bit like Netflix and its ability to be able to deliver so fast and so wide, because that is the point. Because if you still look at HIMS like the weight loss company or the Viagra company, you're already late to the real story. The CEO basically warned investors about this exact thing. On the Q4 2025 earnings call, Andrew Dudum said, "People used to call us the Viagra company." And then he laid out the playbook. Not one product, not one category, a platform that keeps expanding. Labs, menopause, and he said it out loud. Future categories like peptides, which we're working on right now. So if you want to understand why this company can grow even when a headline product gets cheaper, you need to understand the platform, because that's how this thing can get a lot bigger over the next few years. In this video, we're going to dive into how the HIMS model actually runs. We're going to use the real numbers from the Q4 2025 results, and we're going to use their own words from their earnings call and shareholder letter. Then I'll show you how HIMS patterns keep repeating. One product waves bring new subscribers stick around, spending per subscriber rises, and growth slows as the next wave matures, and then the next wave hits. And I'll connect it to the simple idea that Netflix makes this whole thing click.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
And if you don't know who I am, my name is Mikhail, and one of my highest values in life is freedom, and also helping my fiance with her dog rescue center. But outside of that, I'm a big believer that you need two things to experience true freedom in life. One, you need money, and the other, you need time. Because if you have all the time in the world and no money, you don't have true freedom. If you have all the money in the world and no time, you don't have true freedom. That's why here at X10, we developed over the last 4 years that AutoPilot software that allows you to have 100% done for you trading. You can switch it on every single day. We have a team of pro traders that are watching the markets and investing hundreds of hours every single week to pick our winning trades. This month, so far, we've had 100% win rate. I'm going to show you here. If we look at the summary of last week's trade, the end of week results were up 50%. And not only that, for the last 40 trades out of 45 trades, we've been in the green. And our average winning trade is 141%, and our average losing trade is negative 31%. And if you're interested in the type of trades we take, we only take very high liquidity trades, and we're very selective in what we choose. We're big believers that you do one thing and you do it really, really well. You don't need to be in every single stock and every single position. Last week, these are our trades here: QQQ, Palantir, and Coin. These are the 4 trades we traded last week, and everything we do is through Interactive Brokers, one of the largest brokers online. And we aim every single month to get 5 to 15% returns on the money. Why do we have 5 to 15%? Because the data we've collected over the last 4 years has shown us that is what we average, anywhere from there every single month for our clients. If you were to invest $10,000 in 12 months' time at our current projections and the current results we've seen, you would be at $54,000 in the next 12 months. We have one client here that made $6,000 in one trade the other week. Our highest priority is capital preservation. So we don't have massive fluctuations in your portfolio. We're looking to stack consistent wins over a long period of time, because we know compounding results is the thing that really gets you to a place of true freedom. If you want to find out more, x10trade.com, or click the link below. I'll jump on a call with you personally and we'll go through that. Outside of that, let's get stuck into today's video. So HIMS reported in Q4 2025 revenue of $617.8 million, up about 28% year over year. That alone in itself is big, but the story gets crazier when you add that the CEO said about GLP-1 prices. On the call, Andrew Dudum said the US prices for injectable GLP-1s fell more than 80% over the last 18 months. So the obvious question is this: how do you grow revenue almost 30% while a giant part of the industry is getting cheaper? And the answer is actually pretty simple, because the business is not a product. It's not a one product business. It's a platform, it's a subscription, it's a relationship. And in a platform, lower prices in one category can actually make the platform stronger, not weaker, because lower prices can really widen the funnel and widen your total addressable market. So more people can afford it, more people can try it, and more people join. Then those people buy other things later. That's really the key here. So let's go into the full year numbers. For full year 2025, HIMS reported about $2.35 billion in revenue, up 59% year over year. They then ended the year in 2025 with $2.2 2.5 million subscribers, up 13% year over year. Now, here is the stat that tells you this platform is not a one-hit product business. HIMS reported monthly average revenue per subscriber of $83, up from $65 in 2024. That's about 28% growth in value per subscriber. Let that really sink in. They did not just add customers to the business model. They made the average customer more valuable. And that is the Netflix move. Netflix doesn't just grow by adding users. Netflix grows when the user stays longer and watches more content. Netflix isn't expanding into a different product line just yet, maybe in the future, but their whole model is built around stickiness and keeping people for longer. HIMS is doing two things. They're increasing the actual average spend per customer per month by widening their product range. And then also that allows a higher lifetime value because people will stay around longer because you're solving more problems and more needs for them. HIMS grows when the subscriber stays longer and uses more specialties. Now, I want you to use their own words because people will argue about this online. On that earnings call, if you listened, the CEO did not just toss out Netflix as a random metaphor. He said Netflix and Spotify reshaped how people access content, and he believes healthcare needs to evolve toward a similar consumer-orientated distribution model. That is not a vibe. That is a strategy. And I'm not sure if you want to disagree with me, I would love to hear it in the comments, but I'm almost certain for most of the times you need to go see a doctor, you probably don't need that visit. You probably don't need to sit in the overcrowded waiting room where everyone's sick and you know the doctor's always late. They're always late. They're never on time. Most of the time, a lot of this can actually be solved in a much easier, more efficient way, especially when they already have huge amount of data points on you. That combined with AI and being able to understand on a deeper level what's been your medical history over the past few years, and they have access to that in a moment. It's not dependent on someone looking through all of your old paperwork. So you have a better understanding of your current state, you have a quicker response, a quicker solution to your problem. So if we look at the idea, every HIMS product has a lifetime. It comes in as the hot thing, it pulls in a new wave of subscribers, and it becomes the label people use to describe the company. Then the wave really matures. What happens here is growth slows. That initial surge, that initial spike can slow. And then HIMS launches another wave, and then suddenly the label changes again. That's what Dudham meant when he said people used to call them the Viagra company. At first, the front door was men's sexual health. That got attention fast. It also built trust with customers. Then HIMS expanded. They went down the path of hair, skin, mental health. They're going down longevity, weight, and now labs and women's health expansion, hormonal health. And the goal is not sell a bottle. The goal is own the relationship. Be the go-to party when clients want a solution in the health space. He said the vision was not to launch treatments on a website. It was to disrupt how customers have access to great care. We're talking about a massive disruption in the healthcare and also the telehealth industry. That line matters because it tells you what kind of company they're trying to become. A relationship company, a distribution company, a disruption to the industry company. But truly they're a platform, and a platform is broken down into three parts. Part one is acquisition. Part two is retention and average spend per subscriber. And part three is the product wave where growth goes fast, then slows, then speeds up again. So if we look at part one, every product wave brings in new subscribers and new revenue. Most people do not subscribe to healthcare. They subscribe to solve a problem. So their perceived problem is, I need to lose 10 kilos. I need to lose 20 kilos, like whatever that is. So they're not subscribing to a healthcare, they're subscribing to a solution to a specific problem for them. That opens the door. For example, they could be losing hair. They might have acne. They might be anxious. They want to lose weight. They feel something is off with their hormones and they're looking more of a perceived problem. Sleep, energy, libido, muscle, all these things can be byproducts of hormonal health, right? And then this opens the door to HIMS having labs and then other products to help. And with this, you don't get a long wait. You don't want a weird doctor visit. They want it simple, they want it now, and they want speed. So HIMS is good at meeting people at that moment. That moment is true demand. It's intent, and you need to meet someone when intent is high. People are already searching. The product wave is basically a new front door. That's what a new specialty is. It's a new front door that brings in a fresh audience. And once that audience becomes subscribers, the platform just has a chance to keep them. Now, HIMS doesn't give a perfect breakdown of revenue by each specialty every quarter, so I'm not going to make up the numbers here for you, but they do tell you something very important in their shareholder letter. They said that the weight loss, men's dermatology, sexual health, women's dermatology each generate more than $100 million million in annual revenue. That is pretty solid numbers because it proves that the model can produce multiple 9-figure categories. That's true diversification. Again, not a one product company. That's a true offer stack and library of options. It also means something else. It means that when one category gets noisy, the whole business does not automatically fall apart. And another key disclosure from this is they said the HERS brand is rapidly approaching $1 billion. That tells you the platform is not only men's health, it is building a strong women's business too. Again, depth to the library, depth to the offer stack. Now, one of the best examples of the product wave is weight loss because HIMS actually talked about how fast it scaled. In the shareholder letter, they explained that older specialties took years to hit big milestones. They said sexual health and hair loss took about 3 to 4 years to reach $100 million in annual revenue. And they said weight loss reached a similar milestone in about 9 months. That is the platform effect. Once the machine is built, new categories can scale faster because you're not building from scratch every single time. The foundation is there. The building is set. You are plugging a new specialty into an existing machine. So subscribers stay because new products arrive and spending grows. If HIMS was a simple product site, monthly revenue per subscriber would not climb like this, but it did. It went from 65 to 83 on average spend per month for the customer. So what drives that? It's the fact that health is not one need, and health is a set of needs that change over time. That's why the CEO talked about life stages. He talked about expanding offerings as customers into different life stages, which helps build deeper, longer term relationships. Think about how a real person behaves. A person comes in for one reason, then months go by. They notice another issue or they want to level up something else, or a partner asks about another category, or they see a new offering, or they share with friends the results they're getting. Because a company that has good stickiness, meaning the customer stays for a long time, they're eventually going to experience, or you're visually going to be able to see the results. So other people are going to ask, they're going to notice something different in them. And then when you have a great result from just one product, you can start to look deeper. You can start to look into labs or learn something new. So the relationship becomes really, really sticky. And that's the Netflix move. You might join Netflix for one show and then the show drops. I know for me, the amount of times I've sat there and spent probably longer than the episode of whatever I'm about to watch looking for something, that is just stickiness. And it actually is a reminder to everyone that the amount of time, even though we complain about there's nothing good on there, you keep going back there all the time and you keep looking and searching and looking. So the reason you haven't gone to a new provider or a new platform is because the ease, the lack of friction, the comfort, the trust, the relationship you already have, it's just easy. And that's what HIMS is doing, is creating this ease to healthcare. So in Netflix, a new show drops and then a new season drops and then a new movie drops. So you continually stay there and find more and more. Soon you're not thinking about canceling every month. It's just part of your life. HIMS wants the same thing, not because they want to trap people, because the business model is built on giving people more options inside one place they already trust. Now, HIMS also shared the unit economics concept behind this. They said they target payback periods of less than 1 year, and that has trended closer to 6 or 7 months for the last 4 years. So what this essentially means is the money they spend to acquire a customer, they earn that money back within 6 to 7 months. After that, that subscriber becomes profitable fuel. That profit can be reinvested into the next product wave, and that's how the library grows. So if we connect all of this to the falling product idea, because this is where people really get stuck. If GLP-1 prices are falling, doesn't that make the model weaker? It's been reported that the prices have fallen over 80%. So wouldn't that make the business model weaker? Well, not always, because in platforms, falling prices can actually expand the market and it can actually be a strength. This just means more people can afford it. More people join the platform and more people become subscribers. Then the platform can sell other specialties too. That's why you can see strong growth even while a headline category has pricing pressure. And again, this was framed on the call as GLP-1s as a case study in a broader distribution. He said customers are demanding better access and prices that align with other regions around the world. So if this is the direction healthcare is moving, a consumer platform could win even with prices falling, because the platform's job is distribution. Distribution wins when markets start to broaden. Now let's look at part 3. Growth is fast, then slower, then fast again, and when the next wave hits, this is the hardest part for investors, because investors want smooth stories. They want linear growth paths, and you're not going to get it because a platform platform growth is not smooth. It comes in waves. It comes in, growth spikes, wave matures, growth slows down, and then the next wave hits. So growth just re-accelerates what's going on. HIMS basically describes this in their shareholder letter, where they talk about how their pace of launching and scaling specialties has really changed. They also said something important. They said they do not expect every new specialty to scale at the same pace as weight loss. And honestly, that's a really realistic way to look at it, because weight loss is a massive industry and it's a huge pain point and problems people have in life that they're looking for a solution quicker rather than later. And when they also pointed to new categories they believe can become very large over time, they said testosterone support, menopause, and labs could eclipse 100 million in annual revenue in the future. I believe this is the next level we're going to see in the health and wellness industry. At first, 20 years ago, it was just calories in the health industry, and then it turned into organic, and now it's turned into more micronutrients, and also there's a lot of peptides and supplementation people are speaking about on more and more depths. And now the next layer to that is hormones, and I think 2026 is going to be a massive year for all companies in the hormone industry. So the pattern is not one way forever. The pattern is many waves stacked over time. Now this is where peptides come in, because peptides is basically the next future category. They already said they're working on a lot of this, and they didn't just say it, they made a real supply chain move. In February 2025, HIMS announced it acquired a US-based peptide facility in California, saying it would help verticalize their ability to deliver personalized medications and strengthen the domestic supply chain. You don't do that for fun. You do that because you expect peptides to matter in the long run in some form. Now, I'm going to be careful here because the word peptides can really trigger a lot of hype online, and peptides is a very, very broad umbrella. Some are legitimate and regulated, and some are not. Some are talked about in a way that is more internet than science. Trust me, bro science. So I'm not telling anyone to self-prescribe anything. I'm not telling anyone to chase hype. I'm talking about the business strategy behind this. Now, I've personally used some peptides in the past and had some really good results. Now, I'm not going to disclose that or the dosages or anything on there, because but do your own research in this space, okay? It's a new and evolving space. So HIMS is signaling that peptides is a category they want to build into the platform, and they're building infrastructure to support it. Their purchase in 2025 shows that. So now if we bring it back to the main point, why can this platform keep growing even when one product gets cheaper? Because the platform has two engines. Engine one is more subscribers. Engine two is more value per subscriber. That's it, on a very simplistic way to look at the business. More people and more spend per person. So if we look at the first engine, more subscribers, they ended 2025 with 2.5 million subscribers. Subscriber growth was 13% year over year. That is really meaningful, but the biggest story is that they're pushing their reach wider. They're expanding categories and they're expanding globally, and global expansion can look ugly short term because it just costs a lot of money. But long term, global expansion widens the total market. It's like Netflix moving from one country to many. Now, if we look at the second engine, more value per subscriber, the $83 monthly revenue per average subscriber is the tell. The number going up means cross-sell and retention are working. It increased 28% from 2024. It means the library is growing. It means people aren't just joining, they're staying and they're using more. Now, if we connect the falling GLP-1 price quote directly to this, Dudham didn't say the 80% number like it was a tragedy. He actually framed it as disruption, a shift towards better access and prices that match other regions. So if GLP-1 pricing compresses, you can still win if you are the platform that captures the demand and converts it and keeps subscriber growth to expand their value. So if we talk about the idea, this could 10x in the next 3 years. Now, let's look at this in a responsible way. There's no guarantees on here, but no one can promise that. And if anyone promises you that online, start to question what they're actually trying to sell you or tell you. Stocks don't owe anyone 10x, but we can talk about what would have to be true for a move like that to even be possible. A 10x usually needs two things. A business gets a lot bigger and the market values it differently than before. So what would make HIMS a lot bigger? Revenue growth plus new specialty waves. They already did 2.35 billion in 2025 in revenue, and their guided 2026 revenue is 2.7 billion to 2.9. That is growth. Now, that would make the market value it differently. The market needs to trust that it's not a one product story. It needs to see multiple specialties scaling. It needs to see the $83 number continuing to climb. It needs to see margins hold up over time. And it also needs to see the platform survive regulatory noise without collapsing. So I'm not saying this will 10x. I'm saying this is how 10x stories are built, and I am very much long-term with this. They are built by platforms that keep stacking waves. So if we look at one other thing I feel like people underestimate, when people hear product, they think lifetime equals death. They think the product gets old and then it's over. But in a platform, the product lifetime is not death. It becomes a mature pillar. It becomes the doors. It becomes the gate to the library. It keeps producing cash, and that cash funds the next wave. So the early categories like sexual health, dermatology don't disappear. They become the stable base. That base helps fund the next categories like weight loss, labs, menopause, and potentially peptides. That's why the Netflix comparison is not just cute. It's actually really useful. Netflix didn't die when one show ended. It grew because the library got bigger over time. More stickiness. HIMS didn't die when one category gets messy. If the library keeps expanding, the platform can keep compounding. So when you look at the key things, these are some questions. Is the platform getting bigger? Is the library growing? Is the value per subscriber rising? Because if that keeps happening, this is not a one product stock. It's a subscription platform that keeps adding new doors and new levels to the building. And if you believe platforms can win in healthcare the way they won in entertainment, then you can see how this can become much larger over the next few years. So here's what I want you to think about off the back end of this video. If HIMS can grow revenue 28% while a headline category is getting cheaper, what happens when the next product wave hits? What happens if labs become a real growth driver? What happens if menopause scales? And what happens if peptides become a real regulated mainstream category inside the platform the way other waves have before? Because if HIMS keeps turning new trends into new specialties and keeps turning specialties into $100 million plus pillars, then the one product label will keep changing, just like it already has. So the question is actually simple. Do you think HIMS is a product story, or do you think it's a platform story that is still early in building the library? As always, my name is Mikkel, and I'll be bringing you HIMS videos daily. You can check out my other channel here, but if you're looking to keep up to date with everything that's happening in the market with HIMS, hit subscribe, and I'll see you in the next video.